Welcome to Power Charting. Today, Wyckoff Distribution Watch. Is distribution underway? This is one of the really hot topics right now in the Wyckoff community. And so let's really tackle this and then ask the question, contrary to that, can the market rally from here? Hi, I'm Bruce Frazier. I'm your host. Welcome to Power Charting. Well, let's start with a distribution review. We're going to go back over some studies that we've done over the last couple of months here together, and then ask the question, are we in distribution? How far along are we? What are the telltale signs that it's about done? And recall that distribution ultimately turns to markdown, and the markdown is where the severe price damage is done in stocks in markets. Have just a real brief comment on Fed and crude oil. And then at the end, given time, we'll talk a little bit about some portfolio risk management technique, some rules of thumb to help us all be a little safer if in fact distribution does go to markdown. And here you can see, here are two distribution schematics. We've talked about them in the past. And so the one on the left is the distinction here is the upthrust after distribution with a final upthrusting action above the area of resistance with an attempt to rally up and away from the distribution area, which then fails back to support, through support, has a test or a series of tests, and then goes into a markdown through the distribution trading range with last points of supplies that form on their way down to support, which ultimately becomes the all-important markdown. Over here we have distribution schematic 2, where the last point of supply comes late in the cycle, in contrast to the upthrust after distribution. And then this is what precedes, it's the last rally, precedes the series of declines with shallow rallies on the way to the bottom of the distribution area, and then again also into markdown. Read more about this in my blog from 2015. So with that in mind, also please note that these references here are to prior power charting episodes where we did in fact talk about these concepts and review them, so that if you care to, you can go back and see what we did at that time. So, and before we start on this chart, I'd like to take you to an announcement. Roman Bogomazov is starting his new class cycle in the fall. It's outstanding. You're going to want to attend. The first episode is always free, and this is the Wyckoff Trading Course Part 1. First session free, wyckoffanalytics.com. And then also he does a tape reading lab, and that is going to have an open door session on August 25th. And you can see that also that episode for free. And then he and I do a weekly market discussion where we talk about these very topics, among other things. And this discussion, we are going to have a free episode September 1st, register for free. And to make it easy for you, go to the Power Charting YouTube description page, and I will have links for all three of these there. And so check it out. I think that if you're a real Wyckoff lover, you are going to enjoy these courses. Also coming up, TSAASF, the not-for-profit, educationally oriented Technical Securities Analysts Association of San Francisco, TSAASF.org, is going to have a virtual fall conference, second year in a row. We always hold it in September. We have a great list of speakers, and you can go sign up now for this. Sign up is free for members, and so become a member. It's very reasonably priced. And then also another member event is going to be Jeffrey Huge, CMT, is going to speak on September 2nd. So that will be how to construct a portfolio that consistently generates positive alpha, and should be a great session. So please come join us. All right, let's get to work. Here, Dow Jones Industrial Average. This is with a distribution analysis on what has happened here. I have entertained the idea of this being reaccumulation, and potentially it still could be. So the key we want to do is to align this to the distribution schematic with an upthrusting action, because as you can see, there was an attempt for the Dow Jones to rally up and out of the resistance area and above this buying climax peak right here after becoming range bound with a buying climax automatic reaction since early May, long period of time. Big cause is built. So now we can see here that there is an attempt to come back into the trading range area after jumping out. So is this a test? Is this a backup and a test? Very possible that it is. At the time, we showed that it was an attempt to emerge from the danger zone when it rallied up, paused, and then rallied again. Now it's having a rather sharp reaction. Here's the thing about the upthrust after distribution, is that as you can see from this schematic, is that when after the upthrust you get a test, and then it starts to just melt its way right back through all of the prior resistance areas, which are now support, and it moves really easily, effortlessly, wide range, expanding volume as it goes down, because of the very title of this type of structure, upthrust after distribution. That means that distribution has already taken place. Stock is transferred from strong to weak hands, and so the downtrend can begin. It can go steadily and really seemingly effortlessly downward. And so this is going to be the thing that we will look for, is the ability of not only the Dow Jones, but other indexes to move really easily back down to the support area, which is around 33,500, the area of the low of the automatic reaction. And so if we see that, that'll be a huge clue that that is exactly what this structure is. And so we will want to become defensive. We'll talk about that at the end of the program. If I will just go a little faster here, I want to show you again, this is from a prior video, and here is a 15-minute Nasdaq 100 point and figure chart, and this area with the gold line, this count structure here, which goes across, counts up to this area 15,040 to 15,197.75. Well, look where we went. 15,184.27, which was the high print made on August 5th. So really a good count, worked well. Look at how beautifully this signaled an important rally phase coming, big jump up and out, and this count line is at 13,138. Wow, point and figure is great stuff. And so we'll just keep doing lots of point and figure here. But anyway, and also look at how this distribution here worked out so well also. So here we are fulfilled. Now, does that mean that the bull market is over? No, not at all. As a matter of fact, this is an accumulation area that formed in about 2 to 3 short weeks in May. And so upward it went, and now we could have another reaccumulation form for a few weeks and give us another really dramatic upward count. Too early to tell. Now, in the case of the S&P, look at this. This is from May 12th, and they throw over up here of this upper reverse use of trend lines. Solid line is reverse use. That's the way I do it anyway. So that count, which I put this here because this is the highest count we've gotten to, but this upward stride that has been in place since November has been reacted here sharply back down to the bottom of the range, which we will look for buying opportunities when we get into an oversold condition like that. And so that occurred right around the area of this count. Well, this count was exceeded, as we see here, from the 4480. Now here is a chart that is up to date. And so you can see that this is where the 4480 is. And again, another overbought condition. This was the area in here. This was May. And so this was the area of the prior chart that we looked at. Now, again, here you can see downward we go. Look where we're at now. Let's blow this up real quick so you can see it have gone down, touched this lower demand line, oversold condition, but possibly could go through it, attempting to bounce right now. And so we will again look at some other evidence that might tell us whether or not there is the potential to rally up back to the top of the channel here pretty soon. This could be a distributional structure here. So buying climax, automatic reaction, or maybe this is the buying climax, but this could be distribution here. And then a very sharp break, the kind of break we'd see on an upthrust after distribution. So talk about crude oil for a minute, especially regarding the Fed. Fed's been under a lot of pressure because of just the sheer incredible inflation bulge that we've had in 2021, which we have talked about in this program over the last number of months. Now, crude oil has corrected from around the $78 area, just under $78, and is now at 65. This takes a lot of pressure off the Fed. And so the Fed, who said that they may begin to taper at the end of this year, well, this could in fact maybe cause them to soften their language about their strategy. And so the talk is that the market has reacted here and has been weak because of some of the Fed comments. Well, I'm not saying this could happen right away, but potentially the Fed could soften their language just because crude oil has such a powerful impact on the inflation rate through all parts of the economy. So we will just it'll take time for us to see. Now here I did a little point figure count. Here was a count that was back prior to this time period back. This is like March, April, May, counts up to 72 to 75. This count here counts to 66 to 64. We're very close to that count now. The count could be made larger potentially, which would get us down to about 59. So just an interesting place. Finally, not finally for the program, but I want to just again remind you about a chart we've looked at over time, the decennial pattern. We've looked at this. This is we are in the 1 year, 2021, and we see a peak that comes in around mid-year. Here we are in August, and then we tend to have a downward trend into the end of the 1 year, a rally in part of the 2 year, and then another lower low. So that would be sort of a macro cyclic reason that the market may be in need of some kind of a larger correction. So hang on just a second and we'll be right back. Here we're looking at the bullish percent index of the New York Stock Exchange. Top chart, bottom chart is the New York index. So this is all stocks on the New York. And so down here you can see that this is a video. This is a chart from a July video, but at the time we were pointing out, this has been brought up to date here, but we were pointing out that there has been a downward series of lower highs in the New York composite bullish percent, and that this started to really fall off starting in July and into August. And so now this number being above 50% is not alarming by any stretch in my mind, because as long as you have more than half the stocks in the exchange on a bullish percent buy signal, that to me is a solid underlying technical environment. Here you can see that there's something that looks a little bit like it could be a distributional type structure that has formed. We will in a minute look closer at that, but the thing that we would want to do is to see here, you can see a rally attempt here and here, which have produced upward trends in the New York comp. And so we would like to see a stabilization here and then an attempt to go up. Also, you can see that here. And this is the COVID January, February peak. And look at how you had just the briefest of time spent diverging from a high to a lower high into a downtrend. We don't have anything like that going now. Now it's just sort of a slow deterioration, which happens in mature bull markets. Many stocks and groups will fall by the wayside, and there will be fewer and fewer that tend to lead the way. Not uncommon. We're seeing the effects of that now. But here is a point and figure chart done by my teaching partner, Roman Bogomazov. And so I want to just, for the time being here, focus on the COVID low. This is the COVID base back. This is 2021 into the end of the basing period, and look at the count that we had. This is futures, not cash, but you can see that the actual high that we've recently reached is 15,172. 15,400 was the count of this large structure here. And this is very close. So we are within a couple of boxes of fulfilling this minimal count at 15.4. And so we're on alert that we have used up the large amount of fuel that formed in a short period of time for the Nasdaq 100. And so let's just keep that in mind. Now here is the S&P 500 point and figure. 4480 again, I think we talked about that, was the count. Here you can see that 4377 is the count of this area across here. So this zone. So we have overthrown the 4377. So that happens often in point figure. And then what we often see on a fulfilled count, now this is 30-minute point and figure data, is that after a throwover, if it comes back in to the 4377, 78, 4378 area very quickly, then that's a sign that that count had efficacy. So we will be watching that closely. Here is a chart I've never shown before, and this is a very, very interesting chart. I'm not sure that I've ever talked about point and figure on percent box scaling, which is a form of logarithmic point and figure. And so I've sort of perfected the counting method as best as I can on this a while back. I've done a lot of work with Alessio on this, who is our Bitcoin expert. He's done a wonderful job with this tool and also increased the body of knowledge on it. But here you can see that this is a count that goes back to the end of 2018 low. And so this count across here, counting and then doing compounding, you have to compound these results upward. And so compounding this, look what happened. Each one of these boxes is 3% higher than the prior one on the way up. And so now we have rallied up to, in this case, as of August 13, when I did this, 44.66, let's call it, with a 45.8364 high reading and a 41.95 reading down here, here, and here. So we are right in the middle of that range. So this is interesting. Also, added bonus here is the fact that this is accelerating. Now remember, this is 3%. Every box increase is a 3% move, log scale. So this is very, very much a climactic type surge. Whether it can continue on, because it is pointing up right now, if it can continue on like this, the buying climax, if this in fact is what it is, we'll only know after an automatic reaction, will tell us an awful lot. But I'm watching this chart rather closely, and I wanted you to see it. So I want our community to know about the cool stuff we're doing. So here, in the case of the bullish percent of the Nasdaq 100, the Nasdaq 100, which is really 10 very important super mega stocks, trillion-dollar market capitalizations and up. Apple's about 2.5 trillion, huge companies. They are the tail that wags the dog. And so these very small number of stocks have been dominating the performance of the Nasdaq 100. Beautiful little base built here, reaccumulation, big markup. And in the case of the Nasdaq composite, this is 100 stocks over here. This is all of the stocks in the Nasdaq composite. Now, look at the bullish percent of the Nasdaq composite. So the high was made in February, and this is the reason so many traders are finding it so frustrating to trade the market in 2021, is because these great growth stocks have really languished in 2021 since February. And this decline, now this was a chart that was made on July 15th. This was pointing just downward and was approaching the 50% level. So let's move on, running out of time. I might stay over a little bit. We'll close out right at the 29-minute mark, and then I may continue on, just finish some more of these charts. So I hope that that's okay. And so here, 240-minute Nasdaq comp index chart, you can see the really good rally from May onward. This is really just the 10 or so mega caps that have pushed this performance up like this. In the meantime, advanced decline oscillator, 5-period moving average. This is a 4-hour chart, but look, it just keeps going downward. This is diminishing. These are non-confirmations of the upward trend in the NASDAQ comp. So these are non-confirmation actions here. And then look what happened, right back down to the bottom. So this is very interesting. This is as of July. So bringing this up to date, you can see that this is now current. I have shown what's happened since. This has made no additional progress in the Nasdaq comp since that July period. So climactic action, automatic reaction, range bound condition. This might be the climax here. This might be the automatic reaction. Seeing some people do really nice work on this. My hat is off to you folks that have been showing these valuations of this potential distribution. And so really nice job. And so here you can see downward we go. This is, I believe, this schematic number 2 over here, where a series now of last points of supply, ease of movement downward. Today's interesting because here we are on Thursday. Overnight, the market was very, very weak. And now today it's the comp and the 100 have rallied and are positive on the day, the last I looked. So I don't know for sure, but this model is working quite well in relationship. And then notice how after distribution, this markdown phase right here just moves easily and effortlessly. So what I think we need to see to confirm that in fact this is distribution is, because we still are in the middle of the structure, is we need to see a sign of weakness here, somewhere in here. And then a rally phase, and the rally needs to be of poor quality. So it could be that we get a decline, good oversold condition, and then start to have a more important rally that completes a reaccumulation structure. It's too early to tell. The point I would like to make here is that the market is oversold. And now look what's happening is that the Nasdaq AD oscillator is now attempting to rise. We've talked in the past about how when this indicator is rising, it is a directionality tool. And with the other thing we look for is positive confirmation at the lows. So we do have a rising indicator here from an oversold condition. It's attempting to go up. I think that is not a completely bullish condition, but it is an encouraging look for the potential to build a bigger base in here and then start to go up, and maybe we can get a good non-confirmation of the lows, and that would be very constructive. Also, I laid over the bullish percent on the comp here because I think it's worked so well. Okay, but about a minute left. Here's the New York comp with a zoom in July. I did a point and figure count that went down to 15,050, and now this is up to date. So you can see attempt to go down to the 50% level. And so here we are. This looks like an upthrust after distribution here. I put the schematics so that you could compare and contrast. And then here is a 1-box point and figure of the New York comp. Here's a 3-box. I just quickly counted a 3-box count here. Goes down to 14,500. So what has to happen is that a decline has to, now here's, look at this nice little sign of weakness. Now what has to happen is it has to go down here and then maybe consolidate. That will give us another sign of weakness, possibly an LPSY, and then that would show the potential for a completed distribution here. So things that need to happen, because look, we are oversold just below 50%, and now look, higher low, attempt to go up. So if this can consolidate here and start to rise, this could be very bullish.